So it started to progress with a lot of smart followers of my system asking me, well, why not do like an advanced decline or a ratio of the positive stocks to the negative stocks and say what's out there in the market and what does that tell us? And I said, well, that's a really good idea. Let's do that. And that ratio became the market momentum gauges, what you see right here. It tells you directionally, is the market tilting more positively or is it tilting more negatively? At a market level, if you have thousands of stocks, it gives you a pretty good idea of how things are trending, especially if you combine it with the other gauges. The year started off with a pretty hard hit in February, and we had this major breakdown. It was one of the worst start to the market since the financial crisis in 2008. And then right about here, we started getting a breakout and going up. Now, it's important to notice people say, well, your signal's a little slow here, and why didn't you buy it down here? Here's the thing. It's defaulted to be a crossover between the positive and the negative signals. It doesn't stop anybody from saying, oh, look at this. This is near max lows on positive momentum. How many times in history have we ever been at max lows on positive momentum? So you could go back to these max lows and say, hey, I'm just going to buy. It has to come back up from here. Another one I use is like the negative one. If I see 3 days of a down signal on the negative momentum, that's a good warning indicator. I don't have to necessarily wait for an official crossover and say, yep, it was right. Here I am. You could be getting in down here. It's just a question of how much risk you want to deal with.